Today, we're going to be talking about how nurses, healthcare workers, and any frontline workers can get approved for a mortgage, even if you have overtime, temporary, or casual income. Are you a nurse, LPN, RN, care aide, paramedic, dental hygienist, lab tech, therapist, or any other type of healthcare worker trying to get approved for a mortgage right now in Canada? If you are, make sure you stay to the end of this video because I'm going to explain to you some of the special promotions we have available for frontline workers in Canada, as well as some rate discounts and specials we have for you. Here's the frustrating part. You might make great money, but the bank doesn't use all of it. And why? Because healthcare income is often messy. You might have base pay, overtime, shift premiums, weekend premiums, casual hours, temporary income, multiple employers, union pay increases, or you might even have temporary contracts. In this video, I'm going to be explaining to you how healthcare income works and how you can use it to get approved for a mortgage. I'll explain full-time income, part-time income, casual income, overtime income, and how the banks treat all of these different types of incomes in order to get you approved. And also, at the end of this video, I'm going to teach you a trick to get your income up fast and potentially qualify for more. And just to be clear, this video is not for doctors. This is for healthcare workers. I have a separate video specifically for you doctors. This is for nurses and healthcare workers and frontline workers only. And here's the big rule about this. The lenders care about stability. When you apply for a mortgage, lenders just don't ask, how much did you make last month? They ask, can this income continue? The banks really just need to know, like, can you keep on earning this type of income? Every dollar of usable income matters. So first, let's talk about our first-time, full-time healthcare workers, because this is the easiest category to get approved in. If you're a full-time permanent worker, that is one of the most common types of healthcare worker. And this is the type that is the absolute easiest to get approved through a bank. And why? It's because healthcare is considered stable and in demand and secure. So for full-time people, the banks are generally going to ask for a few regular pieces of documentation. They're definitely going to be asking you for an employment letter. You're going to want an employment letter that says that you are full-time, that you are permanent. Most times, the salary will be placed right on the employment letter. So you can use that to qualify. They're going to want that along with a most recent pay stub. The pay stub is to prove that you're working now. And sometimes I also ask for the last 2 years of T4s because what ends up happening with a lot of full-time workers is their salary may be 87,000, for example. But you make more money because you're putting in more hours than required. So a lot of full-time workers are working overtime. They're working shift premiums. They're working holidays. My sister-in-law, for example, she's in healthcare and she works every single holiday because you're getting that time and a half. So your income could in fact be higher than just your base salary. So if you walk into most banks, I know they're going to qualify you with just your base salary. Never mind that. Come and see me. I'll make sure that we are qualifying you based on your highest level of income. Now, what happens if your income is not on the rise and your last 2 years of T4s are higher than what your employment letter says, both years, but the most recent year is lower than the previous year? So that means, like, for example, your 2024 is higher than what your 2025 income was. So let's say 2024 was 100K and 2025 was 98,000. They're going to use your most recent year, or so that 98,000, or they will use your base salary, whichever is higher. The next category that we have is permanent part-time healthcare workers. And this is where people get confused a lot. If you're permanent part-time and you're guaranteed hours, so you get an employment letter that says I'm guaranteed 30 hours a week or 25 hours a week, whatever it might be, then we can use your base salary to qualify you. That part is easy. But most permanent part-time people earn way more than what their standard income is. I see employment letters come across my desk every day, and most permanent part-time workers, let's say their base salary is $19,000 a year, as a permanent part-time RN. Well, your actual hours worked, maybe 40 hours a week on average. So you could be earning a significant income because you're picking up shifts all over the place. You may pick them up in other hospitals. You may pick them up right at your work, covering for somebody on mat leave, or you may pick them up just covering sick days for other people. A lot of times, those people are making a lot more money. So what we end up doing is we take a 2-year average of their income as well. So I'm always looking at your base salary first, and then I'm also looking at the last 2 years T4 average for your income. Now, most permanent part-time people are going to pick up as many shifts as they can, and their income is way higher than what their guaranteed minimum is. So that will also help you qualify for a larger mortgage amount. Casual nurses is the next category. People that are working as a casual nurse or a casual frontline employee or medical aide, whatever it might be, are in a totally different category. And the way they're qualified is it can be a little bit different because they're guaranteed no hours. So how is the bank going to know exactly what these people are getting paid? Well, the way the banks are going to look at this is they're going to look at a 2-year average for you. And this is A banks only. They're going to be looking at a 2-year average for you. So they're going to take your last 2 years of T4s and they're going to average those two. If your previous year, like in the example that I said prior to this, is higher than your most recent year, then they're going to use your most recent year's income. But if your most recent year is higher, they're going to average 2024 and 2025 or 2025 and 2026 income, and that's what they're going to use for your income. In that case, we're going to need an employment letter. We're going to need a recent pay stub to show you are getting hours. And this could be from all of your employers. You could be working at multiple locations. And your last 2 years of T4s. If you are a casual worker, the file really needs to be packaged properly. And there are alternatives, and I'm going to talk about some of those alternatives later in this video. But if you are a new person and you're getting casual hours, we have an option through B lenders where we could take your last 12 months worth of bank statements and average the income coming in from those bank statements or your last 12 pay stubs and average that income. But you have to put more down for that type of thing. If you want to put 5% down, we need a 2-year average if you're a casual worker. Even if you had 1 year, let's say you made 100 grand as a casual worker, which is possible. Then the bank would be giving you, and this is only if you had 1 year of employment, the bank would then be giving you $50,000 for income. Overtime, shift premiums, extra pay, and weekend pay. This is absolutely huge for healthcare workers. Your pay stub might show your regular hours. It might also show your overtime, stat holiday pay, evening premiums, night premiums, weekend premiums, on-call pay, retroactive pay, vacation pay, and sick bank payouts. The mistake a lot of people make is that the bank is going to use everything for your income. They're not. So all of these different types of pay, your overtime, that type of thing, the bank does take that all into consideration, and they're going to use an average of your last 2 years income in order to quantify that. But if you are all of a sudden doing a lot of overtime because you just want to qualify for a larger mortgage, that's not going to help you that much. The bank is looking for consistency, consistency, consistency. The next category is temp, contract workers, and term healthcare workers. Some healthcare contracts are term. So you could be covering somebody on maternity leave. You could be covering someone for a set term. It could be stress leave, which I know is common in your industry. It could be agency contracts, or it could just be like a temp contract. This can still work depending on the term. So if you are the type of employee that does back-to-back contracts, they're going to look at your last 2 years T4s and they're going to want a copy of the most recent year contract. That's if you're a contract person. If you're in a term of 1 year and this is your first time doing a term contract, That's not going to help you that much. You could ask your employer for a more permanent type of employment letter, but I doubt that they'll give that to you. So, what you are going to have to do is you're going to have to average that over the last 2 years of your income, unless the term is as long as the mortgage. So let's say the term is a 3 year term and you just started this contract. Well, then we can put you on a 3 year mortgage, and the bank, they will use that income because you have a guaranteed 3 year term at X amount of salary. So you might be getting $100,000 per year for 3 years on a 3 year term. So they'll use $100,000 as your income. So they're going to want copies of contracts. They're going to want your last 2 years T4s, and not just one contract. They're going to want to show a history of contracts if you have it. If you don't have it, then try to get as long of a term as possible if you're going to be applying for a mortgage, because that way we can qualify you based on whatever you're going to be earning per year for that term, and then we'll request only the length of the term for a mortgage. And a lot of healthcare workers work multiple jobs. So you work multiple healthcare jobs, that is. So you could be a nurse at one hospital, you could be a nurse at an old age home that has medical facilities, a home agency, a private clinic. This definitely can be used, but the lenders want to see stability again. And when I say stability, they're looking for the average of your last 2 years. So you could have contracts all over the place and you could pick up shifts all over the place. Doesn't matter to the lender, but they want to see proof of it. So they're going to want to see your T4s for the last 2 years to average that income. And then they're going to want to see employment letters from all the current jobs and recent pay stubs to show that you're consistently working those jobs. So I came up with a bunch of workarounds to help you qualify for more. And the first workaround is to use the right lender. So not every lender has programs for healthcare workers. I mean, you might walk into a bank, any bank. I won't even name one. And they may not have a program for healthcare workers. If they don't have a program, they're going to qualify you based on your base salary. So the bare minimum. If they don't accept the last 2 years of T4s, you're missing out on being able to qualify for a higher mortgage amount. Workaround number two is to make sure you get a detailed employment letter. So I worked with healthcare workers who are working for a person privately. They might hire a person like me to take care of my grandmother, for example. So say you came in and I hired you to take care of my grandmother, and I told you, okay, I'm going to do a contract with you for 2 years, and I will pay you $50,000 a year to take care of her on a part-time basis. I might not have the skill or the know-how that a corporate department of a hospital would have to write an employment letter. So make sure you're getting certain things on these employment letters. You're going to want to see your start date. You're going to want to see that you're full-time. They're going to want to see what your salary or hourly is, minimum hours that is worked. They're going to want it signed. They're going to want it dated. They're going to want the person's phone number on there, who's the contact person, so that they can verify that income. Make sure they detail all the shift premiums, all the overtime, everything on the employment letter, as much information as you can possibly get. Workaround number two is obviously the 2 year average. So some banks will accept notices of assessment, so we can take your last 2 years notice of assessment. Most of them are going to ask for the T4. So last 2 years of T4s is the best way to show the highest level of income. Another one is timing. Time it properly. So if you know that you're a casual worker or you're a temp worker, time it so that you're applying for a mortgage after you've had a 2 year average, or at least a year and 3/4. Reduce all of your debt before you apply for the mortgage. So what I recommend some people do is, if you've got some credit card debt, you may want to consolidate into a line of credit, or get a parent to pay off some of your debt for you. You have to do to pay down the debt. Maybe finish with your car payment. And that's if you want to qualify for a higher amount. But reducing debt does help your debt servicing ratio, and it helps you qualify for more. Consider B lending. So B lenders are lenders that are not banks, and you have to put a larger down payment with them. But if you cannot qualify with a regular bank right now, then talk to me about B lending and I can give you some options. Usually the rates are about 1% higher, but it's a lot easier to get approved for a mortgage through a B lender than it is a regular bank. Use a co-borrower if needed. A co-borrower usually has to stay on the mortgage for about 1 year and then they can drop off. So I know a lot of people in your industry, they may have a casual position or a temp position or just waiting for that full-time position. If you know the full-time position's coming, then putting a co-signer on for a year might not be a bad idea because that can help you get into the real estate sooner, and you can just get things moving right off the get-go. And the last quick tip is work with a lender that will consider your year-to-date income. So we do have lenders that don't require just 2 years of T4s. We have lenders that will require, let's say, 1 year of T4s. Let's say you worked for a year and a half. They'll take your year-to-date income, so the half year, plus the 12 months that you've put in, and they'll average that income to spit out an income level for you. So that's another trick I've used to get nurses approved when they couldn't get approved, through a standard bank, because some of the lenders we have will allow you to do that, but most lenders just want the last 2 years of T4s. So definitely ask me about that if you've been working less than 2 years. So let's talk about some of the biggest mistakes healthcare workers make when they're applying for mortgages. The first mistake is assuming the bank will accept your gross pay. They may not. They may look at your net pay. We do have lenders that do accept your gross pay. The second one is obviously a crappy employment letter. If the employment letter is no good, they're going to send it back and request another one, delaying your approval. The third is not explaining to the mortgage broker how you get paid, not explaining, you're guaranteed a certain amount of overtime or holiday pay, that type of thing. You want to make sure that the lender has a real full understanding of every type of pay that you have coming in. The fourth mistake is going to just one bank. So what I do to get this approved is I take your scenario and I go shop you at every single bank. That gives you the most options on how to get approved. And then I come back to you and I say, okay, well, these guys are offering this, these guys are offering that. And then you make the decision on which bank you want to go with based on the qualification and the rate. Literally, a nurse that's making $95,000 a year may only qualify at their base salary, say $70,000 a year, if the file is not packaged right. So make sure you're working with a broker or banker that is packaging this correctly when they send it into the bank's underwriting department. If you're full-time, this is very straightforward. If you're permanent part-time, then we need to separate your income from what's guaranteed and what's not. If you're casual, we need to prove history, usually a 2-year history. If you work overtime, shift premiums, any of that type of thing, we need to provide a 2-year history. So the money you make, of course, is very important, but the way, in mortgage lending, the way you get paid this money is the most important thing. So how do B lenders and private lenders calculate this type of income? That's an interesting topic because B lending gives you a lot more flexibility. So a B lender could take as little as your last 12 months of pay stubs or bank statements to calculate out your income. But the bad part is you have to put a larger amount down with a B lender. That would be like 20%. Or a private lender. And then there's a rate premium of usually 1%, and then there's fees on top of that. So it can be more expensive to go with a B lender, but if you don't qualify with a regular A bank, and I would always try to qualify you through a regular A bank first, then B lending is an option. Definitely ask me about that. B lenders also can extend your debt ratio. So there's a ratio, a percentage of debt versus income that the lenders use to qualify you. And a B lender and a private lender has a higher amount that they allow for. So you can qualify more through a B lender, absolutely. So if you're A frontline worker, if you're a nurse, if you're an RN, anyone that is a frontline worker, please reach out to us. We have special programs called the Frontline program is one of them that gives you discounts on rates, lower down payments, a whole whack load of things that can benefit you in the future. The issue with frontline workers and nurses is never that you don't make enough. Usually the issue is you don't have the right lender that to accept the type of income that you're earning. So deal with a specialist. My name is Sean.rampersaud. Thanks for watching the video. Please like and subscribe to the channel. I've got tons of different videos on qualifying for a mortgage or buying real estate in Canada. I teach you tricks on how to get discounts from real estate agents, find the best real estate agents, and how to get discounts on mortgages, insurance, you name it. So check out the rest of the videos. Thanks. Oh, and feel free to call me if you have any questions. Thanks.